This article is coming from the Motley Fool. This top AI stock tanked after earnings. Time to buy the dip. Now, I wasn't going to do a video on Arista Networks, but then the more I read, the more I got intrigued. So it says shares of the top data center company, Arista Networks, tanked on great financial results in the first quarter of 2023. As a new era of computing gets underway, led by the generative AI services like ChatGPT, it seems investors had even higher hopes for Arista Networks than what it would realistically deliver. So it's a AI play, right? First, as far as a Q1 headline numbers go, revenue was up 54% year over year. Operating profit margins were still at 41%. Both metrics were above management's guidance that they provided a few months ago. For the second quarter of 2023, the balance of the year was also pretty good. So they gave good forward guidance. Overall, with nothing seemingly changed from a few months ago, why did the stock fall? All right, so a little bit of background on what Arista Networks does. It seems the market took out its magnifying glass and focused on Arista's Cloud Titan customers. Those customers being Microsoft and Facebook. Arista's network switching hardware and data center engineering specialists. That's what they do. After triple-digit percentage growth from these Cloud Titans in 2022, the expansion is now moderating. Okay, so slower growth, right? So, price was at a premium based on the triple-digit percentage growth. Well, after over 2 years of elevated demand due to a big backlog of business, Arista is reverting to historical norms. As the new era of AI takes over, there should be no shortage of opportunities for Arista. Arista is becoming an increasingly important engineering partner. In addition to providing basic networking gear, Arista also has an important portfolio of software to aid in the management and security of these data centers. Security is a big part of not only data centers, but everything in general pertaining to the cloud. And with AI services like ChatGPT in the early innings of getting created and deployed in the data centers that power the cloud, Arista should remain a long-term growth play. And at about 23 times expected 2023 earnings per share, this isn't exactly a value stock. Well, potentially it is now. As the stock dipped, right? We're going to start with the monthly chart. And I believe this was on earnings. We'll know for sure in 1 second. But the drop created a monthly seller's area. We'll say at the 164. And look down. All right. Don't really see anything on the monthly chart for monthly buyers. Let's go to the weekly chart. All right, so the chart suggests there are weekly buyers down at the, say, the 100 level. All right, so you got your football field to play with. One end zone being the monthly sellers at 164, and the other end zone being the weekly buyers at 100. Okay, there's something here as well. You can see that when price pulled back into this level here, and then this was the origin of the leg up, which took out these pivot highs. So I'm just going to mark that for now. And when we look at that level on the daily chart, it will give us a better indication. Okay, there was a gap up, but volume wasn't. I guess volume was decent. We'll just leave that on the chart, but I won't mark it as a level of interest, although it did react once. Alright, so where are we now? So price crashed on earnings to the tune of roughly $20, but it seems to be basing. Also, it's being supported by the 200-day moving average. Usually there's a three-day rule after earnings plays. You wait for 3 daily candles to decipher which direction price may want to go. And let's see, pull back, and maybe on the 1, 2, 3, third day, or the second day after earnings, you can see the candle open lower but closed higher. So this might have been the reversal level. To go long. Now I don't know how liquid the stock is. Let's see. Okay. Options. Yeah, they're not very liquid. Not very liquid at all. This could have been a nice option play. But you know, if you're well off, you can buy the stock right out, or 10 shares, or even 5 shares, or even 1 share. It's not necessarily how much capital you have. It's what percentage can you grow it. But potentially we reach the bottom, and this is a reversal. Depends on what's going to happen in the overall markets, but it's definitely one to keep on your radar. I certainly will, as it's a AI play moving forward. Thanks for watching. Subscribe. Please like the video.